Hey folks, and welcome to the Pipnotic Symposium for the 30th of July 2023. And today we're going to talk about zones and which zones work and which ones don't. And this came in as a request from one of our fellow traders from Sweden. And so I just want to address this a little bit today within the context of our normal framework, the framework being buy and sell zones, and kind of discuss like why some areas work and why some areas don't, because this is something that can tend to elude people because it's just quite difficult to get right. And so what we're going to do is we're gonna use this pair as an example, because this is according to the dashboard a 4-hour area. This is the euro crossed with the Mexican peso. This is a 4-hour buy zone trade, and so we're going to start from that, and we'll work our way through the theory. I'm going to try and keep this a little bit short today. We're slowly starting to return back to Asia, so we're kind of packing and sending people already, so a little bit tied up today, but I'll keep this one on point. Okay, so I mean, one of the main reasons that a lot of these zones don't work is because focus is not being paid on the context of the zone. And when I say the context of the zone, well, this means that maybe too little information is being focused on where we are on the entry time frame relative to the greater period flows. And so when we can see that we have an area like this and price leaves, and so we visually have an area of demand here. I mean, the most obvious thing would be to buy the test and then take the trade as price continues to move higher and break structure. But this isn't always the case. This is not always going to work, and the reason for this is because we're not paying attention to structure. And so notice that every time I take a trade, I have a bit of a habit of like snapping to the big time frames. And so looking at this, what I can see on this time frame is that we have, my whole mind is thinking more data all the time, more data. And so when I say more data, I'm looking at stuff like this. Okay, we can see that we're slowly wriggling higher. We are moving within a range, and now prices have popped through the bottom of the range. What does that normally tell us? What does that tell us? Liquidity void, liquidity void, liquidity void. So what is that telling us? This alone is telling us a few things, and let's just walk through those one by one. Okay, so we have pushes lower that are increasingly becoming less and less negative. Okay, so that means that despite prices moving lower, the underlying value of the asset is not supporting this continued price behavior. Okay, that's number one. Number two is, I'm just going to put an arrow here. Number two is this, where we have prices moving sideways in a market where liquidity is beginning to shift, and we have moved below a perceived area of value. So what is this? Well, that is, if we try and draw this, it's probably something like where we have prices are moving sideways, they move down, and then we would expect, based on this and based on this, the prices would eventually begin to move higher. So now what we're waiting for is we're waiting for prices to move above of this to show us that we're keen on trading at higher prices. And the reason we want to do this is because we have perceived value here. Prices are dipping below. And so what is that? Well, that is liquidity exploration. So we're advertising cheaper prices in an attempt to onboard buying. Okay, and so this is a very typical example of that. And notice how this move lower is very inefficient. You can also see in the histogram that it's very inefficient because it's kind of dashing lower like so. And so this would lead us to believe that we're probably going to start to move higher. That's on this time frame. If we go to the daily time frame, let's see if we're seeing a similar kind of thing. Well, here you can see, let's even go to the weekly time frame. I mean, on the weekly time frame, and we are really low. Okay, and really low doesn't really mean anything. It's kind of a silly thing to say really low, because nothing is really low. As long as there are people willing to sell at lower sell at lower prices, then prices are going to continue to move lower. But notice also on this time frame, the same thing. We have prices moving lower, the histogram moving higher. Okay, so that would make us think, it would make us think that something is going on here. This is supposed to be like a light bulb, not a very good one. So this should be making us think, so now we have a disconnect in the price of the euro crossed with the Mexican peso and the underlying value of it. So we have prices continuing to run lower, but this is not, the currency strength for these two currencies is not showing us or telling us the same thing. So we should begin to prepare for prices to shorter term move a little bit higher. Okay, so we look at this, and then we want to see value. Where do we have value? We have value here. So we have a low that was moved here. We have value here, value here, value here, value here. Price was here. We went down. We went up. We went down. We went down. How did we go down? Did we go down efficiently or inefficiently? Well, we went down inefficiently. See, this is an inefficient move. Okay, we are running lower inefficiently. Okay, so we would expect these inefficiencies to be rebalanced, because when price moves higher or lower quickly, it's telling us something about the state of liquidity in the market. Okay, so if we have the order book, again like this, if prices are trading around here and they are able to move lower quickly, what does that tell us about the amount of liquidity on the opposite side of the market? Well, it's telling us that there probably isn't a whole lot. It's telling us that there probably isn't a whole lot. And so this is why prices are able to quickly move in like that. But when prices move down through an area quickly, it's telling us about a very limited interest in buying at these price levels. And it's also lending to the idea that prices are very likely going to begin to feed into these thicker pools of liquidity, which will stop price. So prices will stop. And the reason they'll stop is because it does not require a lot of liquidity to move price through an opposing side of the market that has equal or less liquidity. So prices will nip down, and they'll poke into these pending orders or these historical windows of value to the left, and then they will typically stop. And when this happens, prices will stop. And then you look at the price structure here: inefficient, inefficient, inefficient. So prices will naturally begin to gravitate and move north. So now on the weekly, on the daily, and on the 4-hour, we can see that all of these things are in alignment, telling us that we would like to eventually begin to accumulate euros relative to the Mexican peso based on these observations on these 3 different time frames. Okay, well, I'm going to leave this for now. I'm going to let this sink in, keep it nice and short, but I'm going to maybe reiterate this and just build on this in one of the next videos. But I hope this was useful. And once again, if you have any questions, please let me know. Thanks for watching.